Real estate investors, are you ready to save big money on your taxes?
100% bonus depreciation is back. Forget partying like it's 1999. It's 2025 and we're saving some money. Bonus depreciation is a tax loophole that allows certain property to be written off more quickly than normal, generating massive write-offs. Under current law, bonus depreciation would continue to phase out from 40% where it is now, all the way down to 0 by 2027.
The House has already approved its version of the Big Beautiful Bill, which includes reinstatement of 100% bonus depreciation for 5 years. While it's true the Senate still has to come to an agreement, the Senate's version of the plan actually reinstates bonus depreciation permanently. So one way or another, bonus depreciation is coming back. The question is, what does it mean to you as an investor?
You may be wondering how bonus depreciation helps you, because if you don't pay the taxes now, you'll just pay them later, but not necessarily. Let's dive into why not.
With 100% bonus depreciation, you're slashing your taxable income in year one. This puts more cash back in your pocket, means you can buy more properties and increase your leverage. Also increasing your cash on cash return, which is a measure of your profit divided by the amount you have invested in the property. With the 1031 exchange, you can roll over your capital gains from one property into another property and keep doing this indefinitely until you pass away. At that time, the basis resets and your heirs will inherit a stepped up basis.
Your heirs may then sell the property without tax consequences, so it's possible to take massive write-offs year after year and never recapture those gains.
It's like having your cake and eating it too, except that you're dead.
To fully take advantage of the 100% bonus depreciation, you'll need to hire an engineering firm to do a cost segregation study. This will involve identifying property that would normally be depreciated over 5 to 15 years, such as parking lots, landscaping, windows and window coverings, carpet and removable flooring, just to name a few. This property will be separated out and depreciated more quickly than the cost of your building, which must be depreciated over 39 years. Let's walk through an example. Here is an example of bonus depreciation on my own building. This building was purchased for $2.1 million, but it had a cost seg study that identified about $446,000 worth of accelerated depreciation materials. Now, if we take the $2.1 million purchase price and subtract the $258,000 value for the land, we get $1,395,000, which is the amount to be depreciated over the 39-year period. So in year one, we can depreciate 1/39 of this amount, plus the full $446,000 that we identified from accelerated depreciation. If we had decided to skip the bonus depreciation, we would take the $2.1 million purchase price, subtract the cost of the land, and divide that value by 39 years. And we'd only have $47,000 to depreciate in year one. In this case, accelerating our depreciation increased our write-off by more than $400,000 in year one. This should wipe out any gains on the property and possibly put us into loss territory for year one. With that tax savings comes the possibility of using it to purchase more properties, increasing your leverage. Whether or not you can actually write off the entire loss in year one versus carrying it forward to cancel out future gains will depend on your income and whether you happen to be classified as a real estate professional for tax purposes. Now let's address the likely impact of these changes on the real estate market. Although commercial real estate depreciates over 39 years and residential over 27 and a half, this change will sway the pendulum more in favor of commercial real estate for investors simply due to the fact that commercial has more 5 to 15-year property, generating a higher write-off in year one.
Overall, this change, especially in combination with interest rates that are finally starting to come down, is highly beneficial for commercial real estate investors and the commercial real estate market.
Residential investors can also benefit from the reinstatement of 100% bonus depreciation by accelerating the depreciation of landscaping, appliances, and other items. However, the impact will be far less profound. Now, I'm not a CPA, so be sure to consult with yours for personalized advice, but I am a certified commercial investment member, or CCIM, with specialized training in investment property analysis, including the tax implications.
Reach out to me if you'd like me to help you navigate these changes. Drop a comment below. What do you think this change in the bonus depreciation is going to do to cap rates, if anything? If you need a primer on cap rates, look in the links below. And don't forget to subscribe to my channel for more real estate investing advice. Let's build wealth together.